Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, December 5th. Mike Boutros on the mic with you guys today. Hey, DJ J, great to see everyone here in the room. So, feeling a little under the weather today. I'm sorry, I'm gonna let you know right up ahead of the bat, but we'll try to get through this today. We got the NFP print on tap tomorrow, as well as Canada employment change. NFPs are expected to come in somewhere in the range of 190,000. Remember, we got a weak print of 128 last month. Unemployment expected to hold 3.6. Obviously, for the CAD employment change numbers, those tend to be very variable, just metric size. So expected forecast is a gain of 10,000. We got a previous print of negative 1.8 thousand. So unemployment is expected to hold 5.5% there as well. So with that major event risk on tap into the close of the first week of December trade, on the menu for today, we'll go over DXY, Euro, Dollar CAD, obviously gold from last night. Previous updates on Kiwi, Sterling, Aussie, Dollar Yen, Dollar Swiss, and we'll round with a quick look at crude, which has just been ridiculous lately. Completely reversed those losses, right back at the highs, and we're even trying to make a break of resistance today. So we'll take a look at those. Any other questions or trade setups? As always, feel free to throw them on the message board at any time. Let's take a jump right in. So here's what DXY looks like, or here's what it looked like into the start of I guess this was on the 3rd. We'd already made that initial break. We talked about this near-term support here at 97.66, 97.71. You got the 2018 high, got a 618 retracement of the advance there. Just lower, you had the parallel for this formation. Now, again, we had our hesitations about this slope at first, just on the basis that we didn't had too many inflections on them, but the break of the median line saw a reversal and a test before we moved off. So it looked pretty good. The lower parallel caught support. A downside break here should see a lower decline closer to 97.46. That's the 764 retracement. Next downside target. Beyond that, the next key support zone is 97.30. That's the 618 of the broader rally off the yearly low, or excuse me, off the June low. So here's just a broader view, again, heading to the close of the week, since it's our final webinar for the week. Here's what it looks like on the weekly. Hey, good morning, man. Great to see you in the room, as always. So the weekly chart, we're looking at this. Remember what we talked about at the beginning of the week? That we wanted to see a pivot and weekly close below 97.87 to validate that turn that we made last week. Weekly doji at the highs, not quite at resistance. We wanted that a little bit higher, but here's the turn nonetheless. See if we can't get a close at these levels. Watch the oscillator, okay? Watch this contraction that we've seen in the weekly momentum profile. We've been highlighting it for months. Something's got to give here. Something's got to give. So ideal scenario, 96.80 is the next downside target. That's kind of what needs to break on a weekly close basis, the next major weekly support zone. That's the 618 of the yearly range, okay, from the low that we made in January. And it converges on slope. A parallel, the same exact slope that we've been following since 2011 lows, has continued to pay off dividends, okay? So just a broader picture from 1,000 feet up on the weekly chart for DXY has us poised. Here's what it looks like on the daily. So we've pivoted back below that 97.87, nice little contraction pivot zone, excuse me, there. 2018 highs, we talked about that. Okay, former swing lows, there was the break. You're now working on your 5th consecutive daily decline. So I'd be cautious about chasing this any lower from here. Look, we got non-farm payrolls on tap tomorrow. So barring a weak print or a miss or an uptick in the unemployment rate, for example, or a massive contraction in labor force participation, that's something that we've been watching as well. Also, something to keep your eyes on tomorrow as far as labor force participation as a variable print there. (63.3% is what we got last month. Sorry, I just had to look that up. For the broader labor force participation rate in the US. So keep an eye on that stuff. But anyway, all things held constant, after a decline of this magnitude, you'd think you'd get some sort of recovery on non-farm payroll print, possibly test of resistance. Would for us just be a new reset, right? An opportunity to get back short on the recovery. But my point being is the thing that the issue I have is I don't really have any major support at this level on the daily chart to have us sort of look for a bigger rebound. Here's the intraday. And here's what it looked like, again, a little comparison with what we were looking at. So there was that support bounce. You saw a little recovery there, break lower, took out that 97.46 target. Recovery from 97.46 target, went right back into that zone and failed. Really clean price action. Here's the move lower, though. So the momentum profile isn't quite there. I wouldn't be looking for, if this holds into the US Open, I'd be concerned for more sideways lateral, maybe a little bit higher. But point being, the next major downside target over the next, not too long, basically into Asia tonight, converges on that lower parallel. So if you get the break, what a spot, right? What a spot. You clean up any short action that you have on the dollar down here. You'd also be looking for exhaustion for a near-term recovery, at least towards parallel resistance. So levels are clear here. Levels are clear. You're sitting at support for the DXY, initial Fibonacci support into the US Open, downside break beyond here. Your real sweet spot, the more our favorite spot, let's call it, for a larger recovery would be on a move down towards that 97.30 level. Any questions? And just for argument's sake, when you look at the daily chart, guys, and you see these 2 days, the only 2 days that we quote unquote closed below 97.30, I want to remind you that both of these days were kind of into the close of the week. If you guys remember, fat finger towards the end after like 5 p.m., you still saw the market tank somehow on these DXY charts. So I'm kind of discounting these lows. All right. And aside from that, you really don't have any closes below 97.30 since the high that was made. So just some food for thought there. All right. Any questions on DXY? Going once, going twice. Let's get into the majors. Here's what Euro looked like last night. So came into that big resistance zone that we had highlighted. Remember on the break that we highlighted earlier in the week, we talked about 111.04, 111.09. Look for a larger reaction there if reached. Man, did we get it. We sailed through by a little bit, but that upper parallel that we had added did catch resistance, slamming it lower. So a nice reversal off that. And I still think that the risk is for a little bit of a pullback here, but here's what Euro looks like on the weekly charts. 111.03, 111.04, 111.09 is that zone that we talked about. Here it is on the weekly chart, just a near-term 6.8 from the decline that we made on the high in October. Also, you have some of the swing highs from November. Long story, really nice spot. We talked about 109.94 for quite some time. That was a real critical area of support. We sat there and tested that region for 4 weeks before launching this rally. This was the first level. Beyond here, on a weekly close basis, if we breach, that's your next upside target, basically 111.86, 111.12 on the weekly charts. Near term, you're sort of at risk here. I wouldn't be too surprised to see us hold this level for a while. Momentum is kind of coming into the highs that we've made for the year soon. So also another, sort of, what's the word I want to say? Another factor to look at to validate whether we get a larger move here in Euro is this momentum profile. The fact that we haven't been able to cap, basically 50, 52, I think was a high. For the whole year. So if price breaks resistance, we see weekly oscillator breach into fresh highs. That change in behavior inherently would have us looking again, or would suggest you have a bigger turn here in Euro. So here's what it looks like on the daily chart. okay? Here's that new slope. You might Jamie tweeted this yesterday. That new slope that he was looking at looks really interesting at this point. Got a couple of tags off it. We'll work with it for now. Look what the resistance barrier continues to suggest, just above 111, right? Remember yesterday we added this slope. We took this. This is the parallel, the same exact gradient that we've been working off all of this time, off the highs, also converges right there. So I'm not saying this is the end-all be-all resistance. I'm just saying, watch out. Not a good time to be pressing longs any further. Eman says, I'm short out. Eman, you nail these highs. I'm loving it. Great. Awesome. Awesome level. So, heading into the U.S. trade session, you're going to want to see that start to pick up pace. If it doesn't, I choke that up pretty quick. Because we are in a breakout if it does break beyond here. But heading into non-farm payrolls tomorrow, I'd be surprised to see that breach. Here's what it looks like on the intraday. Okay, and here's what it looked like again on that euro update. So you got that jackknife, still near-term support 110.65, so basic 38.2, right below those lows that we made yesterday. So this is the zone that you're looking for right now. Still think the top side may look a little tired here. If it breaches, Eman, you want to, obviously, I'm assuming you have a pretty tight stop on that, but if it breaches, 111.35 is going to be the next topside spout. So you have a little bit of a run there towards a 786, the upper parallel will look like a really good region there. Also some former swing highs and a pivot that we made back on the November decline. Just a good spot. Support, like I said, 110.65, near-term bullish inval, and I want to keep that at this lower parallel at this point. But you get the picture. Looking for a setback to get long. I think I put bullish inval yesterday at 110.33. Makes a little more sense to keep it down there. Michael, no comment with your setup. All my family knows about Michael and how amazing setups we get from you. Cheersy, man. I'm gonna talk the holiday table now, huh? So looks pretty good. Looks pretty good. If we're gonna set back, this would be a good spot. Like I said, 618, you got some former swing highs, really nice pivot in price. You have parallel resistance there. Symmetry, right? Your basic pitchfork principles would suggest a strong reversal off that would have you looking at the lower parallel for sort of support. So areas of interest for longs, we'll keep bullish inval at 110.33 or 110.32 for now. Non-farm payrolls on tap. Let's see what we got here. Okay, number 3, dollar CAD. Obviously going to be a huge player tomorrow. Here's what Loonie looks like. So big break, right, on the back of the BOC yesterday. Here's what the move looked like. We were looking for this consolidation, right, all week long yesterday. Last week, rather, never broke. Into the start of this week, we're still looking at this thing testing basic channel slope support. That held. False break at the top side of the consolidation. Really quickly recovered. Here was the BOC break and Chirata. Looking for a low, 131.91 was a near-term support level, bearish below the median line. Next downside target, the bigger level, was 131.52. Now, we're not quite there yet, but it's on the way. Is it there? No. Oh, we're close now, but it hasn't triggered just yet. Anyway, that's a big region for me, okay? It's the 618 of the rally. You got the lower parallel for this formation. I know that the top side looked pretty messy, but we're just working with the basics of that basic gradient for now. Here's what it looks like. First on the weekly charts, to give you a broader picture of why I think we're coming in some support here. We got to watch this downside target. Here's the median line, okay, for this formation that we've been following off the highs from last year and this year. Now, it hasn't been the cleanest, but you've seen the 75% line, resistance, 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 resistance. You've seen the median, the lower 25% line. It sailed through down here, but you did get a catch into the start of October, into the close of October trade. And here's some play on the median line. Long story short, a level to look for, right? Nothing to go nuts about, but a level to look for, just to be cautious of. Here's what it looks like on the daily chart. Same slope, a little bit more clarity along the pivots as far as what we've been doing for the median line, but I'm just cautious here. Okay, here's the 618 of the rally off the yearly low. I'm cautious here. Here's the low day close for September. Comes in just a couple of pips lower at 31.52. Okay, the monthly open for last month, we're below it right now, but we have to close the candle. You get the picture. Here's what it looks like on the intraday chart. Okay, it's a big region for me, just lower. So watch out if you're holding any shorts on the downside on this setup. Watch out into this region. It could be a nice little spot that you could see a little bit of a recovery in. You're deep in oversold territory on momentum. So I would not get cute on getting too aggressive on a long position. If you do take it, make sure positioning size is low. But I'd need to get some pretty strong triggers, let's just say that, to put me into this one. I mean, you're in oversold condition on every time frame. Yeah, I'll be watching this one closely into the open. If you see exhaustion down here, or even if it spikes towards 31.34, the low that you made back in September, okay, and that September initial drop, even if you were to spike intraday or intra-candle into that level, but you don't close, kind of sit here afterwards, that might also be a near-term exhaustion trade to try to fade. But, ultimately, this thing is still bearish. Just looking to play a little bit of an exhaustion trade if we do get it off this zone. Questions, comments, concerns on dollar CAD. Now, again, heading into tomorrow, with the double whammy employment prints, the ideal play with a setup. Let's say things close at these levels. Okay, well, I'm just making believe that we're closing at these levels to give you an example. If we were at this region into NFP's Canada employment. For me, it'd be if the market were to spike higher, look to fade that, right? So a rip towards the median line, or even, the upper parallel. I don't want it to get quite this high, but maybe the upper parallel would still be an opportunity, in my humble opinion, try to get on the short side again. If that print comes out and it fuels a downside break here, there's really nothing to do. Okay, if you're not already short when that happens, you're sheerly chasing it. I can tell you, I mean, 1, 2 times it might end up well for you, but that kind of trading won't work, and in the long run just is not a good way to trade. So if it ends up just shooting down, you get weak US NFP, for example, and a strong Canada print, whatever, something to that degree. If the downside break materializes, look for a drop towards. We had the low day close from October's 30.86. The big zone of support is down here. Okay, if it were to recover, or if it were to break, for example, and you were to get a decent recovery to give you a decent high against this region, you could try to fade that. But I think if you get this break, a break of downslope support, big zone of Fibonacci support, if you get this break, I think it's likely to be an accelerated drop. So don't get cute on this one if tomorrow materializes a break. Any questions on dollar CAD? Should be a very interesting print tomorrow. We'll be looking at this with great interest heading into non-farm payrolls. All right. Last one from last night was gold. And just wanted to give an update on this one because it's kind of hovering here. I think, again, you get maybe some more sideways before this thing does anything. But here's what we were looking at last night for gold. You know, the focus was the big support barrier on the weekly charts. I don't want to go over this one again because you guys have seen this so many times. But really big support barrier. We rebounded off it, moving higher. The big resistance level was kind of 1488, 1490s. You had slope resistance there, 38.2, and upslope resistance as well. So the daily chart looked like this. Near-term resistance zone. Here's just a basic, the low day close that you made back into the open of October trade. Really nice pivot in price. Downslope resistance, right? Oh, here it is right here. Downslope resistance. The reversal, low day reversal close. Nice zone. Nice zone. Again, the big zone, 1490, just higher, that's 618, got the upper parallel, heading a little bit deeper into the month here. So intraday looks like this. And again, here's what we looked like last night. So still holding that same support zone. Eman says, I am short at 1483. You are just nailing these trades, Eman. Well done. You got 1483 somehow? That's awesome. So 1472 is your near-term support. That's just a basic 38.2. The bigger support zone, in my humble opinion, is 1469. That's the 50% retrace of the weekly range, just this week's range, literally. And it converges on the median. Now, again, I don't have too much conviction on this slope. It just looks like it's a pretty decent gradient based on the breakout that we saw that fueled acceleration in the median line and then the upper parallel. The 50 lines held no, has paid no mind here. So I'm just focused on this range. This is the bigger zone, ideally, for failure if we get it. So don't get too comfortable in that short, but yeah, looks pretty decent, at least near term. I do want to see one more low if we can get one. I don't know if we get quite down into 1469, but that's the ideal scenario here. 1483, 1484, essentially still resistance. On a topside breach beyond that, you're still 1490. That's still the big zone. And all of this is still within the confines of the broader downtrend that we've been following. Here's the 240, right? So wouldn't put it past this thing. Make another run here towards that 50, maybe the median line before spiking back into the upper parallel. But at the end of the day, you're still in this near-term downtrend for now. 100% extension off the 12 November low completed in gold. Puja. I was looking at that, and I don't know why it's not here right now, but you're absolutely right. I don't know why that wasn't there. 1483. Interesting. Does change things, or at least makes the possibility of failure here more of a realistic type of scenario. I'm writing myself some notes. Sorry, guys. Give me 1 second. So look, the basic range right now, 1483 into 1469. Watch for a break of this immediate range. A downside break beyond here, you're risking a dump right back into 1460 again. The upper pair, a breach here. I mean, you'd want to see acceleration because of the upside break of an ascending channel, but not with this confluence here. Not with that confluence there. I'd still be very cautious of 1490. Look for reaction. on a move towards 1469 if we get it. Questions on gold. Would make sense, right? If dollar finds support on a move into that lower parallel, into that target just lower. That a recovery, and obviously stocks have been on just completely plummeting, right? You could see that recovery kind of giving this thing a little bit of a pull lower if we get that recovery in the dollar, but need to see that median line break before I get too excited about resumption. All right, that is gold. Next up on tap is Kiwi, number 5. I know you guys love you some Kiwi. Here's this thing. It's been a little bit of a snoozer for me, after this upper parallel. Remember after I hit this, I told you guys kind of I'm just looking for some sort of clarity, some sort of exhaustion, because I don't want to get in on this, favoring on the long side from these levels. Here's what it looks like, or here's what it looked like on the 3rd. So there it was, right? The initial focus was on that near-term range break. It did break this parallel, but we didn't quite make it to the 618. Here's what it looks like. That 618 from the drop. This is the entire yearly, this is entire July decline, that massive spill, right? 56.66. You also have the swing lows for the opening range in July, same region, 56.65. The high that we just registered, what is this? 65.62. Just pips off. Just pips off. And here you are marking a reversal candle after a 4-day advance with momentum right at 70. Wow. So this might be the exhaustion trade that we were looking for back here. Here it is. Some divergence right into the highs. So that's kind of screaming exhaustion. Near-term support, you look for a move back towards the median line at this point. Let's clean this up a little bit. 50% retrace is null and void. I'd actually just highlight that swing low right there. Kind of converges right on the median line today. We're at 65 handle. Wow. Big figure. Psychological barrier. That's your initial target on this drop here for Kiwi. Here's what Kiwi looked like, by the way, on the weekly charts. Pretty interesting because this was the barrier that we were looking for. Again, we just missed it by a couple pips, so we're not gonna get too bent out of shape. But 618 retracement. There's that swing low from January, from that January drop. Remember that fat finger, big start. Nice big zone of resistance. Here's the first tag and test. Here's what it looks like on the 120. All right, that is Kiwi dollar. Any questions on New Zealand? Next up on tap, sterling. Here's the British pound. Finally getting the breakout. You guys remember 29.90? We've been looking at that level since back here in October. 29.90 failure, 29.90 failure, 29.90 failure. Here's the break. We talked about the fact that when it broke, you didn't get that accelerated move. And that's alarming. right? Because when you see a break of big resistance, the tendency for the cascade effect to clear out those stops typically starts to move a little bit faster. But you didn't get it, right? At the end of the day, not only did you didn't get it, the part that was reassuring though is that it held support. So that range from 29.76 and 29.90, we popped through it, started at support, stayed at support, stayed at support, stayed at support, topside breaks off, further acceleration. So look, I'm constructive on this trade. I think, again, at these levels from here, yeah, you definitely could get some, exhaustion. But um, do you chase and buy here? No. At the end of the day, you look for the pullbacks to get long. So even if you do get some exhaustion here, I'd be looking for some support well above 29.90. Ideally 30.76. You guys remember this is a huge target that we talked about for so long. You could go back on the updates for months, and you'll see that 30.76 target has been thoroughly covered. Right, big region. So we're there. We're breaking through it. Next major upside target 32. Okay, it's psychological barrier. It's the 1618 extension of the advance. Big stuff. So look to stay constructive while above this 29.90 region. I don't think you get that low. Again, if you get pullback, initial support 30.76, but essentially you're looking for a stretch towards 32 on this sterling move. Questions, comments, concerns on sterling. Tweeted you my Kiwi chart. Oh, thanks, Pooja. Where's Twitter? Pooja, that next comment, that's about your chart. Let's go back to Kiwi. Interestingly enough, the 100% extension converges on the level that we were following from that January low, 65.85. The 100% extension comes in at 65.84. An opportunity to short. Yes, I would say, Pooja, that if market gets up there and it spikes into that region, that's a region I would be a lot more comfortable getting in on an exhaustion trade. But here's the thing: it would need to happen soon. It would need to happen soon, because the upper parallel converges on there only, basically into today's trade session. Then you start to get out to here. You can get back now. You talk about, well, you might as well just check 66 at this point if market gets into this region. So depending on where we are in time, Pooja, but all things held constant on this chart right here, if the market were to spike into 65.85 like today, yeah, I'd be looking to short that. Does that make sense? Daily chart, probably the high is already in. Yeah, so this is why I was telling, well, first of all, Iman's already in the short, but I'm assuming. So, yeah, if that's why I was telling you, I don't want to be a stickler. I was looking for 56.66, right? I even had an alert to go off that if we get to 56.66, I never went off. So then, you know, it was that it? Was that the attempt and failure? Could be. Looking at the daily chart, yeah, that's pretty ugly, especially if it turns out to be a reversal candle on a long wick like that into resistance. That screams exhaustion. But everything, all things held constant, looking at this just objectively, you had divergence in overbought condition, second divergent signal. I mean, depending on what, time frame you're looking at, divergent signals were pretty decent into the highs. We're looking for possible dollar recovery at some point off the lows. Yeah, could be the time for the pullback. Yeah. Right. Yeah, I'm looking right. So that daily slope. Yep. 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 That big, larger pitchfork. So we've dilly-dallied with all different types of broader pitchforks on on Kiwi. I know that's the one that you're looking at. Yeah. So either way, it puts that confluence at this major resistance level. Yeah. Here's just to share with everyone the slope that Pooja's looking at. Right. So adjusted slope here off the high. It's got a little bit of a break there, but the converges on the upslope that we're watching right here. So either way you slice it, come in some resistance. Coming some resistance. This would be a nice spot if we get the spike, but we'll see. All right. So we covered Kiwi, we hit Sterling, that was number 6. Number 7, Aussie. Haven't really been able to get another play on this because it's just, it's kind of been ranging in this zone. There was actually a really nice opportunity on this reversal to move back on the higher on the upside here, but that even failed ahead of that 68, 63 target as well. So look, you're getting some near-term consolidation. Everything's kind of contracting. Expect the non-farm payroll lull to start to filter into Asia tonight and even to the end of U.S. trade tonight. This afternoon, and look for a break of this 68-10 zone, 68-63 zone. It's still the same zone we were talking about on Tuesday. We haven't broken it. Here's what Aussie looked like back on the last update here on the 3rd. Right? Same zone. We're in this pivot right here. So no change to the Aussie levels. And again, just to highlight the Aussie weekly, what I'm watching, 2016 low week close is 68.55. Would love to clear this. And for me, that would validate, excuse me. Oh man, I'm losing my voice towards the end of the week. That would validate if we were to close above that, a larger move out of this downslope from the highs that we made back in, what was that, June of last year. Looked like we broke out here, quickly pivoted and closed right back below the next following week. Here's the low we closed, defended. See if we can't get some more legs here on Aussie, but the basic focal range, at least for now, is going to be on a breakout here. Ideal scenario, by the way, for Aussie, you see maybe you see a little bit of a contraction range, maybe see consolidation, lower highs, maybe make some lower lows, but topside break, spike into the upper parallel, and then failure, either here or here, would be the test. Let's just say that. I'd be out of anything. I'd be really interested to see if this was a good fade opportunity. But obviously, if you crack the monthly open, that's a change in behavior. That's a big shift. You keep the upside focus, would validate a break of this downslope we've been following off the highs. So we'll see here on Aussie dollar. Any questions on this one? Not much going on here. Well, not after that breakout, at least. Dollar yen. So beautiful plain dollar yen. Doesn't happen very often, like I always tell you guys, but when it does, they can be pretty darn sweet. So here's what dollar yen looked like on the 2nd. You guys know that into the close of last month, we were talking about this major key resistance barrier that we were heading into. Critical barrier. 618 retracement, you had the yearly open just higher at 109.67, massively important, like really, really critical. Into the start of the month and the week, we came right into it. That's where we opened, and it failed miserably. Downside move had us looking for a drop towards 108.48, and that's basic 236 of the advance. Also converged on slope. So you look for a break there to validate whether you have a larger move to the downside and a more significant high in place. Well, you got the decline. It dropped right into that zone. You had some divergence into the lows. Excuse me. And here's a little bit of a recovery, right? Get this to 240. It's dollar yen. There's not much to look at. Basic retracement off the high. Doesn't look like there's much here to look at either. No, I'll keep that 618 actually. So I'm looking for failure. I'm looking for failure on a move higher, closer towards 109.20s, maybe not even that high. And I'm also looking for downslope on this thing. Put this on earlier, but I really don't know how I feel about it. I mean, actually, in this case, 50 will probably be right there. Yep. So just some reference, right? Levels of which I'd be looking for possible topside exhaustion if we get it. Obviously, the downside break is necessitated below that 108.48, 108.50 level. And this is really messy, so I'm gonna clean up with that 1618 as well. That's what I'll be looking at. That's what I'll be looking at. Basically, we need failure somewhere between 109.07 and 109.20s if this is gonna move lower. Downside break below 108.48, basically the weekly lows. Watch these swing lows here for those November fringe lows there, but I mean, ideally, your ideal scenario is still for a drop towards that 38.2 at 107.70. You know what I mean? The 108 handle is a psychological barrier, people like to call it, but watch that. But the bigger level, in my humble opinion, is still going to be that 107.70. Any questions on dollar yen? Here's dollar yen, by the way, on the weekly charts. Critical level. Critical level. The weekly close is going to be important here. Okay. That is dollar yen, number 8, number 9, dollar Swiss. So Swissy it's like Aussie, right? You saw that big sized move early in the week and then nothing. And ever since then, it's been in consolidation. And it's kind of flirting with near-term recovery and then flirting with a test of the level which it should have hit, which is in 98.38, 98.43, big region, right? It's basically coming off of monthly open support, guys. So the monthly opening range, if you get a larger recovery here, which I suspect you do, and even up until 99.30 is okay. It's not a 618 anymore. We broke that low. but it's still going to be that pivot in price. What I want to say? Oh, if you are to get a larger recovery here, it would really have a very clean monthly opening range set just below resistance. Now, might be a little bit rich for me to say that the opening range is set on the 5th of the month, but my point being is when you get the opens of the month into a major resistance barrier like this, and you get a drop like this into last month's open, if that becomes a recovery, you darn right bet if this breaks, whatever this breaks, you'll probably see a pretty substantial run on either side, especially if the top side breaches. I mean, if this breaches from here, there's huge implications. I don't think you do. We talked about this region when we first got here. It was a massive region of significance, and we looked for the short. We got the short. This was our first level of sort of where you'd expect to see support. It broke, validated the break of the upslope, and now you're basically looking at a very clear-cut, simple range just below resistance, right? How many times have we tested yearly open support, 50% retrace at this level? Here was September. Here was October. Here's December. So no need to complicate things. You know, this consolidation that we were looking at obviously is not in play at this point. So treat this for what it is, right? You're coming off of the monthly opening range lows, the monthly open from last month, right? Here's the recovery. Likely to see a little bit more sideways within this range. Ultimately, I do want to see this break lower. But until we clear the yearly open at 98.38, you're in a range. You're in a range. So we'll rework this if we get some clarity on near-term slope. I don't really have anything at this point that I'm comfortable really getting involved in with dollar Swiss. The short was the best play. The fact that we didn't quite make it into the support barrier, I don't know. We might still, but we're out. So, you know, if we do get it, I'd be actually looking for a possible near-term exhaustion here. If it breaks, expect acceleration. We've tested this zone 3 separate times. All right, so that's sort of the game plan here for dollar Swiss. You're kind of on the sidelines, looking for either some sort of exhaustion off the yearly open, or if you do get that break lower, the accelerated drop. Last but not least, here's a quick look at crude. You know, 57 was our bearish inval. It surged through that thing. The break below this region here had us looking for a more significant, you know, move if we clear the October opening range low at 54.91. We didn't even quite get there. It failed just ahead. Our bearish inval was 57. 57 broke. Accelerated rally took us right back into the highs. Guys, if we close above these levels, it'd be a clear-cut breach and break above the 618 retracement of the decline off the highs from September. I'm also really interested to see what momentum looks like into the close too, because if that close is materialized with you know, a momentum breach or a move into the 60 region, which we haven't seen so far since the low, all the more reason, excuse me, why I should be looking for that move towards 60. So I will reassess both Swissy and crude here into the close of US trade today. I really want to see what these look like. Any questions? All right. Well, if there are no other questions there, we'll go ahead and wrap things up. Hope you guys have an awesome weekend. Watch out tomorrow into non-farm payrolls heading into that print, especially with the CAD employment numbers, guys. Dollar CAD really, you know, we'll keep you updated on SP Squawk, but I really want to see what the price looks like as we get into that print. There's a couple of different alternatives to how we can play that tomorrow. So we'll look for those non-farm payroll print tomorrow, 8:30 Eastern. Other than that, guys, have an awesome day. I'm going to go rest up and try to heal up some more. You guys have an awesome weekend, and I will see you on Monday morning for the free session on Daily Effects and right back here on Tuesday and Thursday. Best of luck trading, guys. Cheers.